Bitcoin's recent struggles might have you worried. 4 straight weeks of losses, the longest losing streak since 2024. But don't panic just yet. While the price action has been undeniably rough, with the fourth quarter shaping up to be the worst since 2018, a painful 24.43% drop, some indicators suggest a potential turnaround is brewing. Sean Dawson, head of research at options analytics platform Derive, sums it up: I expect a rough ride into Christmas. He anticipates continued volatility, but also hints at a possible recovery down the line. So, what's giving some investors hope amidst the gloom? One key on-chain metric: the aggregate spot bid-ask delta at 10% depth. This essentially measures the difference between the highest price buyers are willing to pay, bid, and the lowest price sellers are willing to accept, ask, reflecting the underlying demand. This metric recently spiked to its second highest level in 2025, which can signal increased dip buying activity and absorption of selling pressure. Think of it as bargain hunters stepping in to scoop up Bitcoin at lower prices. And this is the part most people miss. A similar spike in this indicator earlier this year, in March and April, preceded a significant 64% bull run. Could history be about to repeat itself? Currently, Bitcoin is trading around $87,400, showing a roughly 6% increase from its November 21st low of $82,100. This recovery coincides with a shift in expectations regarding Federal Reserve policy. The probability of a December interest rate cut has surged from 40% to nearly 70%. Lower interest rates tend to make riskier assets like Bitcoin more attractive. But here's where it gets controversial. Dawson, while acknowledging the potential for a rebound, remains cautious. He warns of a possible bull trap where a temporary price increase lures in unsuspecting investors before another downturn. He points to pressures on digital asset treasuries, many of which are trading below their net asset value, limiting their ability to accumulate more Bitcoin. Similarly, many spot Bitcoin and Ethereum ETFs are also in the red. Even with the increased odds of a rate cut, Dawson believes that fears of sticky inflation could lead to a slower transition into quantitative easing than previously expected, worrying traders. Quantitative easing refers to a policy where the central bank injects money into the economy, often boosting asset prices. A slower pace of quantitative easing could dampen enthusiasm for Bitcoin. Looking ahead, what can we expect? Dawson is optimistic about a recovery to $100,000 by the first quarter of 2026, but he anticipates continued bearishness for the remainder of 2025. He notes a negative skew in the options market, with traders actively buying put options, which give them the right to sell Bitcoin at a specific price to protect against further downside. Specifically, there's a large buildup of puts in the $80,000 to $85,000 range for the December 2025 expiry. Dawson predicts, I wouldn't be surprised if Bitcoin briefly slipped into the mid to high $70,000 range before recovering to roughly $90,000 by the end of the year if the Fed doesn't strike a hawkish tone. A hawkish tone from the Fed would signal a more aggressive approach to fighting inflation, potentially involving further interest rate hikes, which could negatively impact Bitcoin. While overall sentiment remains in extreme fear territory, the recent weekend bounce has provided a glimmer of hope. The upcoming Federal Reserve policy decisions, including the end of quantitative tightening on December 1st and the interest rate decision on December 10th, will be crucial in shaping the trajectory of Bitcoin and the broader financial markets in the weeks ahead. These decisions could either solidify the recent recovery or trigger another leg down. What do you think? Will Bitcoin experience a bull trap before recovering, or is the recent rebound the start of a sustained uptrend? Are you buying the dip, or are you waiting on the sidelines? Share your thoughts and predictions in the comments below.